You are listening to ChartingWealth.com for Thursday, the 13th of July, 2017. Everything is up for the D. The S&P 500, the Qs, that's the NASDAQ 100, TLT, the 20-year bonds, and gold. Now, we do not attempt to forecast. Why? Because it's exceedingly hard, if not impossible, to forecast. What do? We look to ride trends, and we continue to see that the weekly chart, the weekly trend on the S&P 500 is down since it crossed over back on the week ending the 23rd of June. As we delve into that, before we get into the two-day, let's look at what's been going on the weekly chart very quickly. We had a spinning top for the week ending the 30th of June. Then we had a spinning top again on a downward momentum for the week ending the 7th of July. And we have a green spinning top so far this week, not over yet. Still have 2 full days, all day Thursday and all day Friday. And we shall see what happens. Now, it is curious to note that we continue to have the derivative oscillator moving down. It's actually gaining momentum over the course of the week versus the prior weeks, downward momentum. We do see our PPO, price percent oscillator, which is our blue line. It is our number one primary indicator. It has gone flat, and the red signal line is moving toward it. So again, we'll continue to watch. Now, a couple of things alarming about continued down movement on the S&P 500 is that we have seen over the course of the latest two-day candle that ended on Wednesday. It is a green open box candle. Now, it does have a large wick on the bottom, portending a lot of down movement still, along with a even bigger wick on top. It has pushed through and closed through on the two-day chart, both the two-day trend line and the weekly trend line. Now, it could retrace those things. Well, this candle won't, but the next candle could, but that is some power moving up. However, it was not enough power to cause the PPO, the price percent oscillator, to cross over or to move the derivative oscillator over to the green. Now, that may happen in the future, but we'll just continue to watch and see what we see. Of course, we did see some of this coming when we saw that crossover going up all the way back on the 10th, and it was actually portended by strong upward movement on the afternoon of July the 7th. That was the prior Friday. So throughout the course of the week, a little bit of a pullback in the morning on the 11th, but strong movement otherwise. In fact, both movements on the 11th, but a big push-up on the 12th and decent-sized push-up in the afternoon of the 7th and on Monday the 10th. So we'll continue to watch what's going on there. But again, if you happen to still be any kind of downward trade, which we warned you about staying in on the S&P 500, of course, alarm bells are going off. Now, you might say, well, is it done? Is the downward movement done? No, because we still have confirmed down movements on the weekly and the two-day. If indeed, with this pullback, we see the 4-hour chart rotate back over and go down, then of course that would be your trigger to jump back into a downward trend. So again, 4-hour chart's going to be key here on getting back into that movement. Now let's keep moving through. Of course, the NASDAQ 100 had an up day 1.19%. Now that was strong enough to actually, now we have a green spinning top after 2 weeks of down movement. In fact, the prior week ending the 7th of July, huge strong movement. The week opened above the two-day trend line and has moved up to the weekly trend line, has not closed it, penetrating it yet. What's interesting, though, is derivative oscillator continued down energy on the weekly chart. The PPO, price percent oscillator, not quite flat, still trending down, as is, of course, the signal line. So we'll continue to watch that with interest. What's going on the two-day chart? Not yet crossed over. Derivative oscillators losing energy. It is important to note that the price percent oscillator is moving up toward the red signal line. Again, the week opened above the 2-day trend line, but what's really interesting to look at is not yet crossed over the weekly. And so we'll continue to watch that. On the 4-hour chart, of course, we saw that crossover back on Friday the 7th in the afternoon. Been strong up movement except for a little bit a red open box candle in the on the morning of the 11th. Otherwise, strong up movements. And for the 4-hour chart, it has actually crossed through and closed above the weekly. So we will continue to watch that with interest again. If we see strong pullback and crossover going down on the 4-hour chart, it would be another entry point in a down move. Of course, this is a market that just wants to keep going up. It did reach its peak way back on the 9th of June. I say way back, that's not that far back. It just seems like it. But the market topped off around 143 and of course closed at around 140.55. All right, let's keep moving through these charts. On the weekly chart, we'll now take a look at TLT. It of course has crossed over going down on, it's still in a confirmed up move on the weekly chart. We did have a crossover going down on the 2-day chart. And again, we've had about 3 weeks of down movement. Of course, we got out of that trade about 3 weeks ago. On our prior up movement, we can see that we still have a trending down 2-day, even though the weekly is up. Means, of course, we don't have a trade. We have to have both our 2-day and our weekly moving in the same direction. Weekly is down. Movement is just touching, the up movement's just touching the downward trend line after 4 rather large 2-day candles moving down. Momentum is still down. We do see a break in the downward trend, not going down as quickly as it had been on the prior candles. As we hone into that 4-hour chart, what do we see? We see that it crossed over in the morning going up and then rolled back a little bit in the afternoon. So again, if indeed there's enough up movement to rotate that 2-day chart over, if there's enough power on this up movement, don't think there will be. But again, does it matter what I think? No, it matters what the charts say. We don't do anything till the charts tell us to. And right now, they're telling us just to watch TLT. Lastly, we will look at gold, and we will, of course, start with the weekly chart. Gold has 5 weeks of down movement. We had that weekly vertical crossover going down on the week ending the 30th of June. After 3 weeks of down movement, there was enough power to rotate it over. We've continued to see the derivative oscillator accelerate in the down move. Derivative oscillator still heading down. We have bunches of candles, like we said, 5 going down. Now, as we look at that 4-hour chart, well, let's look at the 2-day before we get there. 2-day, again, is resting right there to penetrate, actually penetrating that 2-day trend line. And the derivative oscillators started losing some of its downward momentum. And the PPO, the price percent oscillator, is not going down quite as rapidly as it was. As we look at that prescient 4-hour chart, of course, it did manage in the morning to cross over going up. Typically, that 4-hour chart crossing over means that it's going to go up for a while. That 4-hour chart tends to be a very accurate chart that we can typically count on up until December, early January. So it is penetrating the 2-day trend line. And again, be cognizant of that if you were in a down move in gold. Now, what does it mean? Is all hope lost in continued down movement? No. But out of that trade, if you're not already, wait for things to level off. And if indeed the 2-day and the weekly continue down and the 4-hour rotates back over going down, of course, you can jump back in. Folks, that's where we are as we end the day on Wednesday, as we go into Thursday, the 13th of July. We so appreciate you being with us. You have questions, problems, concerns. We love to hear from you. If you're not already signed up for and are receiving our daily market review, you ought to be. With that, you get every single day our review. You also get our How to Read a Stock Chart video. You get the layout that we use at freestockcharts.com and instructions on how to sign up for that for free. You also get our trade worksheet. We just posted a brand new training on how to use the trade worksheet, which is probably that and your daily worksheet. Number 1 and 2 things you should do all the time, every day with the daily market worksheet, and of course once a week with the weekly worksheet, and of course every time you do a trade, you use the trade worksheet. I'm telling you, if you will do this, it will supercharge your trading. Otherwise, you're just sort of watching a podcast. But if you want to really get into learning how to chart so that in the future you can read these charts and think about what does it mean if you can look at a chart and read it. You know when to get into and out of the markets, and you're accurate with that. Could it mean early retirement for you? Could it mean millions of dollars in the bank? It could. It could. If you can read these charts and you can trend follow, it could be worth millions to you. And the only way you're going to learn how to do that is by practicing. We're not a stock calling service. We don't tell you what to do. We want you to practice with us. And when you get good, then you can make your own decisions and spend your own money. In the meantime, open up a virtual account at any of the online traders, any of the online banking services, the online stock services, and start TD Ameritrade, Options Express, Options House. You can Schwab. You can go through any and all of them. Open yourself up one virtual account and start practicing with us, and you will be amazed. It'll take some time, but you will be able to get the hang of this. I can't tell you if it'll take months or years, but the more you practice on a daily basis, 10 minutes is all we ask, you will learn this. You can do it. No matter your level of education, some of the best traders and investors I know just have high school diplomas. So again, it's how bad do you want it, and are you willing to spend 10 minutes a day? 10 minutes a day. Come on. You can do that. We know you can, and we're here for you. All the best. God bless. Let us hear from you. CW@chartingwealth.com. Again, sign up for our daily market review. Take care of yourselves. The whole team here at chartingwealth.com wishes you and your family the best. God bless.